All right. Good evening, guys. Ken at Tortoise Capital. It is the nightly strategy podcast for December 9th, 2020. And there's winds of change in the air. So let's see what we got here. All right. So we're looking at the daily health check. So yesterday, everything was wonderful in the world. We had made a new all-time high, 10-day high, 30-day high. And then today happened, and my spider sense is just tingling all over the place right now. We had a slight gap up and then a sell-off all the way down through yesterday's low of the day, the skin of the dragon, Z1, to the spine of the dragon, where it held and had a minor hold right there. But this felt like about 1.5 ATR of directional selling. And the three bellwethers that we have been using to ride this leg of the market up all collapsed today. So Tesla, big down on news that I think it was either Goldman or Morgan placed a fair market value on them of 90 instead of the 650 that they were trading at. And they're down at 591 in the aftermarket, closing at 604 and then trading at 591 in the aftermarket. That's either going to be an amazing point of entry or a premonition of more things to come. But the bidirectional volatility now is clearly in play on Tesla, plus in their sister company, SpaceX, one of their rockets blew up on the pad today, so that's not good. To the downside, we have we're going to have support levels at the skin of the dragon at 365. Tomorrow's PSAR will be at 363.5. Today's PSAR 362.5. 10-day low about 359. That one feels significant, although even a breach of this price level basically eliminates all the gains of the last 10 days, which is why yesterday I was talking about the 2-day low and the skin of the dragon as being really the determinant for me, because I wanted to preserve those gains. Like, I'm not willing to give up these gains here that were earned from the 10-day low up into here, which is why I had a relatively tight stop. If the 10-day low breaks, then Bollinger Band at 355 is in play. Long-term fair value down here at Z-1 around 343. And again, just for reference, our 30-day low, just 30 days ago, this thing was at 322, which is now well beyond Z2 and beyond Z1. So the gains of this market, to me, just feel vulnerable. So if you're not out of this thing yet, I just don't see how you let it get past the PSAR. That's been a really nice long run. But here we are, let's see, 5, 10, 15, 20, 23 days into this trend from the reversal of this sell-off from previous high. So you certainly can't let it go below 355. That would be almost a 5% sell-off and going past the Bollinger Band mean. So I think you just got to decide how much of this gain here you want to keep. And if you're not out yet, I think if you're not looking at the PSAR +1, I just don't know, then your long-term orientation must be kicking in. Let's take a look at the sectors. Let's see what we've got. Okay, so we've got the S&P here at -1%. Oops. So -1% in the S&P. Diamonds were down about 0.5%, -0.44. The Russell at -0.75. Treasuries also down, so no safety today, down -1/3. But when the broad market is leading the sell-off, that's not a good thing. Let's take a look at the downside sectors. So steel gave up some gains at -1.1. Mexico Wiz -1.6. Brazil -1.66. Tech -1.9. The FANGs down 2%. Silver down 2.6. Wheat and precious metals 3.3. Bitcoin 4.25. Was trading below 20 for a while today. Clean energy down 4.25. And then if we take a look at the companies that got smashed today, Tesla down 7%, and really, if you got to add another 3% off of that. If you take a look at the price in the aftermarket, trading down to $591, so that's another $15 off that, which is 2.5%. So call it 10% haircut even. Palantir, the IPO, down 7. U.S. Steel cracked today at -6.25. The triple techs are representative of all of the tech losses today. So you had the broad tech sector -6%. The triple NASDAQ 6.7%. So it's really more the large caps than the broad sector. But electric company NEO 5.5%. Virgin Galactic Space 3.75%. Nikola 3.25%. Nvidia 3%. Cliff, Alcoa, Amazon and Apple down more than 2% each. Microsoft 2%. Boeing, Devon Energy, Procter & Gamble. So the assassination today was broad and deep. Things better than the S&P. Emerging markets only off 0.86. Ackman's hedge fund up off 0.75. The quality low volatility off 0.5. Healthcare off 1/3. Finance off 1/4, along with oil. Materials were basically flat at 0.06. Energy up a quarter. That's how much Devon got smashed today when the energy sector was up, but Devon was down. That's a bad sign. Japan, defensive play up 0.7. Oil exploration, 0.72. Commercial real estate in the form of Simon Property Group, 0.8. And then the VIX coming back to life here at 3.7%. You know, my spider sense is just tingling all over the place that the volatility event may be here. We shall see. The companies that did well, and there were some. Old reliable Home Depot, finally outperforming at 1.5. Caterpillar, DuPont, Win, Nucor Steel, Twitter, Walmart. So some of the old reliables, not really tech to be seen in there. Home Depot, Cat, and DuPont. That's almost a flight to quality there. So some real concerns. The only thing I had time for today was getting out of swing positions and then taking a shot at a couple swings, or a couple intraday snipers. Let's see where that is. Yeah, so let's get the Tesla Snipe. All right, so this one was after a significant sell-off from 650 yesterday, and it sold off to an intraday play at so that's a significant winter type of a move for you, all the way down to 588. It gave so that's like a 10% sell-off intraday. So I looked at the Z3 excursion and then a 1, 2, 3 entry, and I played a tight stop. So an entry at like 597-ish with a tight stop at 593. So that's about a $4 risk. And then took the exit at 603. So that's about 2 execution hours here. It pulled back. So that's a supported spring crossing, but I'm front running it. Really, that's just a Z3 overreaction in a rebound. If I had entered at the supported spring crossing here, I probably would have exited at the same spot. What this really, it could also have entered at the PSAR trail, which would have put your entry here, and that's also a good exit for about 1 hour. What I want to highlight is Kata 2. So you have a swing low, you have a higher low that holds, in this case, above the PSAR. And then I buy the RLXD. So that's Kata 2. So you have a harsh winter, you have a low, a higher low, and then you buy it in the pocket right here at the RLXD. In this case, it's crossing the Bollinger Band mean as well. Tight stop, so I'm buying it at 602 with a $3 risk at 599. It gets through, it leaves the river, crosses Z2 and the fair value, and when it was breaching the Z3 pinch here, I bought a second position at 612, so I'm $10 to the good, and little over 3R in hand on the execution risk, and it made another move up to 616. So that's 1R on this one, an additional 1R on that one. So I'm holding 5R at this point, well beyond Z2, and then it starts rolling over again right at 230. I said, you know what? I'm taking that one at 614 3/4. It then traded down to close at like 604. So would it close down in this area here at 604? which is like a reversion back to the Bollinger Band mean. And then it sold off as low as 591 in the aftermarket. So it's back testing these lows already. So tomorrow, could we see another move like that? Sure. Is the SpaceX news pertaining to Tesla? No, except it's kind of all about the cult of the Musk personality right now, so I'm worried about that. So I am flat in Tesla right now and ready to trade the volatility intraday. If you haven't seen Danny's trade frame on his swing short on Tesla using options to control his risk, you should really take a look at that. He's done a great job laying that out. As soon as he put that one on, man, I started getting nervous about the long side position I had in Tesla because he's pretty savvy. I'm glad to be out of Tesla. All right, next one up is, let's see if we can get the, there we go. Next one up I want to look at is PBW. So this one also experienced that big intraday sell-off. It was up around 94 and sold off harshly to like 87.90 at 2 p.m. So I bought the supported spring crossing here at the in the usual way at like 88.40. So here's the risk. Oops, get that in place. I'm not offended if you play it with a 25-cent risk, if you're just using the bottom of the dragon, or I think the more conservative play at the bottom of the RL10, which would be 87.90, so that's about a 50-cent risk. So that's the first entry. It makes a COTA 2. So second entry I take at the like the emerging dragon. I wanted to get it inside here, but by the time I got filled, I had already cleared that hump and was moving well. So as it's leaving the river, I got the second position in. It crosses the fair value, crosses Z2, crosses the Z3 pinch, makes a move all the way up to Z. It's riding that Z2 line here, and then gives me about 5 bars of retracement. Crosses the dragon, hits the PSAR, and that was about the same time I took the Tesla exit. And so this one cleared the deck on PBW, and I'd already exited PBW swing on this slide down here. And this one, a bird in the hand was worth 2 in the bush. It sold off as low as the Bollinger Band mean plus a little bit, and then gave another supported spring crossing. I played that, basically scratched. Didn't have the will to play another one or to go short. I just was glad to be on the sidelines this afternoon. This has been a pretty good 20-day period and a good 10-day period, and it just felt like a changing of the guard to me, with Bitcoin getting smashed too. So here's about 1, 2, maybe 3 execution R's for the trouble. Bitcoin, let's see if this is going to cooperate here. Yeah. You can see the on the Bitcoin swing, it had gotten as high as 24 before, and then you get a rollover, you get summer turns to fall, you get a 1, 2, 3 exit, you get a crossing of the Z1, you get a crossing of the dragon, the PSAR. So if you're still in this one, you're a true believer in Bitcoin, where you're trading, weekly bars maybe. But to me, this run was done back up in here, and there's been 1, 2, 3 really good days of intraday sell-offs. I find it harder to trade GBTC on the short side because it is it's limit orders only, so you have to eat a little bit more of the spread in order to get what you want. So I'm not as quick to put multiple positions on. But this one is now coming back into an interesting area here at the high end of the previous excursion up to around 20. That feels like a psychologically important level. And you've got the Bollinger Band mean here, and a ton of support at around 1850. If you look at that volume, that was from this one outlier bar, but tremendous price interest at this thing at about 1850, 1875. So I wouldn't be surprised to see a test of that tomorrow. And a lot of folks that will treat that as almost it's at least it's a 4-day down. Tomorrow it'll be a 5-day down if it closes below 20. So I see a tactical play in this thing intraday. I'm not ready to swing trade it yet. I want to make money intraday and then fund to swing trade if I can. So those 3 bellwethers that we've been looking at are that we have been holding: the Tesla, PBW, and Bitcoin all got slaughtered today, and I'm out of those positions. So the volatility play, now if we look at, so VXX has that time premium decay, and it's slid from 33 to 21. On the volatility spike, went from 21 to 28. That's a 33% move. And then it went from 28 to 16. So that's like 12. That's about a 40% slide. And so in context, today's move, is just part of the normal noise at the bottom of this slide. But if we look back at these reversal moments, all feature an initial bounce and then an explosion. So I would be ready for this one. To me, it's an auto buy at about 1750 to get above that. Yeah. And then I would probably add a second position automatically at about 18 and a quarter. So if it does explode, I'm going to be surprised into 2 positions intraday, and then I'll manage those intraday. And I think the next target would be up here at about, call it 20 even, around the Bollinger Band mean. That would be the least surprising move. So if we look at the size of this move from 22 to 28, that's about a 30%. So 30% off of 1650 would be about to 23. So that move would, that's what about a 30% move would look like on an upside spike. Okay, so that's the potential for that spike really to get to the far side of the river. That's what it did here, all the way up to Z2, in fact. So I'm concerned about that. Okay, all right. Let's take a look at the daily report now and see what happened in the world. All right, so we've seen the daily report already. Shifting to the market summary page, we are still in bullish quiet conditions. As you can see, bullish quiet. Overbought on the longer term measures. At the high normal on the 2-week, 10-day, and then on the 2-day cycle, just a smashing of the frame. So just Friday, we were completely overbought across the board. We said it was quiet. Yeah, too quiet. ADX remains green, neutral, and green bullish in the price relative to the 200. We're still in risk on for risk Z. And again, that decay into the fall is making this market vulnerable. So we're kind of like in this kind of a mode right now, where we're in the fall looking at the winter, and it's been quite a while. Yeah, so the overbought conditions on the 10-day just dropped below overbought for the first time in memory. No signals on channeling and overreaction. Not many dojis today with a large directional move, although we did see some breakout strength here in Goldman Sachs, in Cisco, and Johnson & Johnson. So we got that. Salesforce is at 4.2 to 1. It was a channeling and 4.2 to 1. It was a collapsing move today, so now it's negative for 1 day, 10-day, 1 month, 3 months. So that was just added to the Dow along with Honeywell. Looking for Honeywell here. So, in Danny's model for Tesla, when all the buying pressure to make it a component of the S&P disappears, that undercutting of that buying pressure is what sets up his short side trade. And he wasn't forecasting that till like January, but he's got a long-term options play on it. So we'll see how that shakes out. Home Depot had a good day today, up 1.5% and still 3.6 to 1. McDonald's had a doji channeling and is 4.8 to 1 and was in the green today. It's up a fraction. So that may be the bottom is in on McDonald's as a value play. ETFs, no dojis whatsoever, no breakouts to the upside, and lots of assassinations today. Mexico, Brazil, gold. NASDAQ and silver were big losers. Metals and mining started giving back. Yeah, so if we look at, maybe if I can get U.S. steel on the board here. Yeah, so this is the U.S. steel move out of that sideways quiet channel from back in the day when we were looking at this rascal over here at 7 and 8, and the breakout ran all the way up to 20. It peaked intraday up here around 20, and then sold off all the way to 18 and a half, 18 and a quarter. So that's done. And now when we look at this, really the entire move, the exceptional move was this move here up to the point where it broke out of Z2. So to me, I don't think you can let this go. If you're owning this, I don't see that you can let this go below 17 and a half. And to me, the Bollinger Band mean target on this thing at 12 and a half is in play. I mean, it could, now there's a lot of support levels between, 18 and 12 and a half, but that can disappear as fast as it gained. That's all within a 10-day move. That's a 50% move within the last 10 days in a steel company. And today, it just basically cracked. If you take a look at all the previous pricing action, there was no decisive large range selling day whatsoever. This was all accumulation, then a parabolic move to Z3, and then a collapse. And I just feel like that's done. In the auto framer, we've got some, let's see, McDonald's, Salesforce, and Home Depot are in play. I got to believe that treasuries should be interesting at a price of around 156, 157. The narrow range symbols today, McDonald's, Home Depot, and Honeywell, I think, are always of interest. The S&P was even relatively small compared to some of the other moves at 2.0. Let's see. I'm going to cut right to the NDX time frame. So Salesforce and Microsoft getting smashed today. Home Depot, on the other hand. So you're seeing a real differentiation now in companies. So here's the big winners today. Home Depot, 3M, IBM to a lesser extent, and a great day in Johnson & Johnson and Goldman Sachs. In the ETFs, it was Asia less Japan, the industrials, the Euro-Asia mix, the not U.S., and then Japan as a defensive play. So Japan should be interesting to us right now. And then the things that still hard to believe this silver and gold didn't thrive on a day like today. So it just goes to show. The Qs were a minus 100, and even real estate got smashed. So not much in the form of safe havens, and not much that I want to own overnight, to be honest with you here. So this is still maximum coyote time. The master opportunist. He remains in play. All right, that's everything I wanted to cover for today. I would say our percent stretch getting a little extended. This was the nice move of about the last 30 to 45 days, moving from Z -1 up to Z +1 and peaking out. So the last time it got to that level and rolled over, there was a sharp recovery, a retracement, I should say, and there was here, and there was here. So a significant, 5% sell-off here would be losing $15, $18 in the S&P. So there's a lot of room to the downside. That would take us all the way back to, a $15 sell-off here would get us all the way down to this is the 5% sell-off mark. That's right down here at the Bollinger Band mean and about 355. So that's in play. And so I do not want to give back that kind of gain and lose all of the hard work we put in here. So that's what my stop is tight here. If you haven't already exited, my stop would be pretty tight right there. Okay. All right, that's everything I got for you guys. Please take good care, and we'll get this published and posted here shortly.